All right, welcome. Today, we are diving deep into one of the most talked about assets on the planet, gold. Something really big is happening here, and the smartest money in the world is definitely taking notice. And it all kicks off with one pretty staggering number. Just take a look at this, $5,000. And no, that is not a typo. That's the price some of the sharpest analysts in finance believe a single ounce of gold could be heading for. So yeah, that's the billion-dollar question, isn't it? And look, this isn't just some random number pulled out of thin air on the internet. This is a serious forecast, and it's being discussed right now in the boardrooms of the world's biggest financial players. Now, what's really wild about this is the consensus. Goldman Sachs surveyed over 900 of their institutional clients. We're talking about the heavy hitters, the huge funds, and they found that almost 7 out of 10 of them expect gold to keep climbing. And get this, the biggest single group, more than a third of them, are the ones who are actually eyeing that $5,000 target.
So, what is it that they see? What's giving them this level of confidence? Well, in this first part, we're going to break down the massive forces that are fueling this incredible new gold rush.
It's really not just one thing, it's more like a perfect storm of factors all hitting at once. You've got central banks buying gold at rates we haven't seen in modern history. We're all seeing the geopolitical friction and this kind of constant economic uncertainty becoming the new normal. Inflation is just sticking around, proving way tougher to beat than anyone hoped. Global debt is at absolutely eye-watering highs. And on top of all that, you have some major countries actively trying to de-dollarize, which basically means they're dumping US dollar reserves for an asset they see as safer and outside of any one country's control. Every single one of these is like a massive tailwind pushing gold higher.
And this picture just illustrates the point perfectly, right? Gold's appeal is nothing new. The ancient Egyptians literally called it the flesh of the gods. For thousands of years, through every single crisis, through the rise and fall of every empire, it has been the ultimate safe place to park your wealth. It has zero counterparty risk, meaning you don't have to worry about a bank or a company on the other end of your deal going bust, and it has no liability. It's just a pure cornerstone of stability.
Okay, so if you're sold on the why, the next logical question is how? And today, that choice really comes down to two main roads you can take. You can either hold the actual physical metal in your hands, or you can own a digital piece of it through the stock market.
This table lays it all out pretty clearly. With physical gold, the cost to get in is a bit higher, and of course, you're the one who has to figure out how to store it safely. On the other hand, gold ETFs let you buy in with just a few bucks, and they take care of all the security. And when you want to sell, ETFs are instant, click of a button. Physical gold takes a little more legwork. So that's the key takeaway right there. It's a trade-off between having that tangible ownership versus modern convenience and liquidity. So let's go down that first path for a minute. Let's say you want to own the real thing. I'm talking about gold you can actually touch and hold. How do you do it? Well, the whole process is actually a lot more straightforward than you might think. It really just boils down to 3 simple steps. First, you do your homework, figure out what your goals are. Second, you find a reputable dealer and ask them a ton of questions. Then, third, you make the purchase. You'll get what's called an assay certificate. That's just the official paper that guarantees its purity and that it's the real deal. And then you decide how you want to keep it safe. And that brings us to the 2 main ways you can store it. Keeping it at home in a really good safe gives you absolute control and you can get to it anytime. On the other hand, using a professional vault service gives you the maximum, fully insured security, which is often what you have to do for larger amounts or if you're holding gold inside a retirement account. All right, now for path number 2. Investing with just a few clicks from your screen. Gold exchange-traded funds, or ETFs, are the modern, super convenient way to get exposure to gold prices without any of the hassle of owning the physical stuff. But, and this is super important, not all gold ETFs are created equal. You have funds like GLD and IAU whose whole purpose is to track the price of physical gold because they actually hold giant piles of gold bars in secure vaults. Then you have ETFs like GDX and GDXJ, which don't own any gold at all. Instead, they own stocks in gold mining companies. Now, this can give you leveraged exposure, meaning the mining stocks can shoot up even faster than the price of gold, but they can also fall faster, and you're taking on all the risks that come with running a mining business.
So, we've gone through the why and the how. We've seen the big institutional forecasts. We've looked at what's driving the market, and we've explored the 2 main ways you can invest. And really, all of this brings us right back to you and your own personal strategy.
Because in the end, the whole decision between physical gold and a gold ETF really just boils down to this one simple question. There's no right answer or wrong answer here. It's just about what fits with your goals. Is it that timeless peace of mind that comes from a physical asset,
Or is it the flexibility and ease of a digital one?
And that leaves us with this one last thing to think about. The world's biggest, most informed investors, they're making their move. The forces pushing this trend are huge, and they're not going away anytime soon. So, the only question left is, are you prepared for the world that they see coming? Thanks for joining us.